My guest today is Michelle L. Roberts, the lawyer high earners call after they get sick or hurt, file a disability claim through their employer's plan, and get turned down. She has represented claimants and only claimants since 2005, first in plaintiff-side ERISA litigation, then as a partner at Kantor and Kantor, and now as principal of her own firm, Roberts Disability Law, in the San Francisco Bay Area. A career she traces back to watching her father, a disabled Navy veteran, fight to keep working and supporting his family. So today we are running her experience in reverse, walking through the decisions a buyer makes long before a claim exists and what each one turns out to mean on the day an insurance company decides whether or not they will pay. So Michelle, thank you for being here today.
All right. Thank you, Jamie.
So in your 20 years representing people whose disability claims were denied, take me into the call that you get from a professional who just found out their employer's plan said no.
Right. So yes, happy to do that. And that's a call that I get many times a week. These are conversations I have all the time from various different professionals. And, a lot of times when I get the call, the potential client or my client doesn't really understand what their policy provides and really why the insurance company has said no. There's this idea that if your doctor has said you can't work, that should be enough, and that's what they pay for. They pay for that coverage if their doctor determines that they're unable to perform their occupation. And so a lot of times, I have to spend a lot of time educating my clients on really what these ERISA policies are about. When I say ERISA, I'm referring to policies that are provided in the private sector workplace. And so not individual policies, although some people have both ERISA policies and individual policies. But ERISA policies are ones where a lot of times the claimant or the employee hasn't negotiated those terms. They go to an employer, the employer provides the benefit package, which includes a policy. Oftentimes, that policy is an insurance policy. Sometimes the benefit is from a self-funded plan. So the employer is large enough where they decide they're going to self-fund their own benefits. So I would say that a lot of the disputes are around questions of, fact, whether or not someone is actually disabled and what that means under the policy. A lot of policies start with an own occupation definition of disability. So that ensures somebody who can't perform their own occupation, typically as it's done in the national economy, not so much how it might be done for that particular employer. So, for example, I have a client who is a surgeon and he has an issue or injury with his hands that is preventing him from being able to perform surgery. Now, is he completely disabled from all occupations that exist? No, but he's disabled from performing his own occupation. And so, just thinking of an example of a current client who is a surgeon who has a group policy through the employer as well as a individual policy, and there's different definitions of disability, so you have to be mindful of that. But he's got insurance that at least will insure him for a period of time under his own occupation. And that's where we start.
So maybe explain what that means. So, because a lot of our clients, they're high income professionals, and so they have their group policy and maybe they do have an individual policy. So explain, like in this circumstance, where maybe one would pay and one wouldn't, and why it's different.
Yeah, absolutely. So in this situation where you have somebody who's got multiple insurance policies, and that is already a good starting point because a lot of people don't have insurance. So if you have both, I have seen cases where one policy may pay and one may deny. And why is that? So in the individual context, so if one has an individual insurance policy, that is very likely going to be an own occupation policy. Because it's an individual policy and not an ERISA policy, insurance companies are aware that, any kind of bad acting on their part isn't going to be something that they're not going to have to pay for down the line. We can talk for an hour just on ERISA remedies and the problems that creates in claims administration, particularly for claimants. But I have seen cases where there are two different insurance companies, so there's already two different decision makers. and one is decided, yes, based on the evidence, you're not just you are disabled from your own occupation. And then let's say in the group policy context or the ERISA policy, the insurance company denies it because, they don't want to accept the treating doctor's opinions, or they claim that there's a lack of objective evidence. And the process for how the claim gets pursued is very different in the ERISA context. And because of that, and because of limitations on remedies, I do think, at least anecdotally, I will see a lot more ERISA denials than I do individual denials.
So you said something interesting when you said about the ERISA definition, a disability versus the own occupation definition, disability. Maybe kind of explain what a typical ERISA definition says and what that means to somebody in real life. Like maybe use a story or an example of what that might mean.
Yeah, so I want to clarify that there is no real like ERISA definition of disability. So ERISA is just the federal law that governs these claims, and it doesn't itself provide what that definition of disability is. So when you think about, Social Security benefits, for instance, there is a definition of disability that applies to all claims. Whereas in the ERISA context, it's very employer specific.
Hmm.
So the employer doesn't even have to provide these benefits, but if they choose to provide it, they have to issue like written plan documents that define the terms of the plan and what the eligibility requirements are. And so when
Yeah.
I talk about own occupation definitions and any occupation definitions, these are just two types of definitions that are commonly found in ERISA plans. So I would say a good ERISA plan for a claimant would be one that is an own occupation policy for life. And what that means is it's insuring you from disability from your own occupation. So it doesn't care if, you were a lawyer and now you can, work at Burger King. That is not, it's insuring you from your inability to be a lawyer for the entire life of the policy.
Hmm.
But however, what's common in the ERISA context is you will have own occupation definitions of disability for the first, let's say, 2 years of disability. So
Okay.
for the first 2 years, you have to demonstrate that you're not able to perform your own job. And then after 2 years, that definition will often shift. And it doesn't, it shift the way that it shifts can vary depending on the employer. So where you have a definition of disability from any occupation that has a gainful wage requirement, that is going to be more favorable than one that doesn't. So what do I mean by that? So you can have an any occupation definition that says, we will pay you benefits if you cannot perform any occupation for which you are qualified for based on education, experience, training, and station in life. And that station in life is often key because it means that you have to be able to find a job that at least is going to pay you typically somewhere in the range of like 60 to 80% of what you were making before, because you have to maintain this station in life. So if you were, somebody who was making $500,000 a year, your ability to get a job that pays, $80,000 a year isn't going to disqualify you for benefits.
Okay.
Where there is an ENEOC definition that does not include a station in life requirement, or that you have to be able to earn at least a certain percentage, a lot of times insurance companies interpret that to mean your ability to work any job, even a part-time job, would disqualify
So it
you.
would be that Burger King example. Yeah.
Exactly.
Yeah. And what percent, like from your experience, what percentage of group policies have any occupation versus, like you mentioned, like the station in life?
Yeah, so I would say that and again, I'm just speaking from my experience and in handling these claims for over 21 years. I would say for the most part, the majority of the policies we see will have an any occupation definition. So maybe roughly, 10 to 20% tops that come through our door will have a own occupation for life policy. So we're usually expecting that there's going to be a transition from own occupation to any occupation. And then within the any occupation, I would say that I would say probably at least a good half contain a station in life requirement. And again, my pool is, people who contact us, and I'm in the Bay Area, and we get a lot of these, employees who work for these like big tech companies, and they're usually those policies tend to be more favorably written for claimants and they have station and life requirements. But it's important to know that before you file a claim and really
Yeah.
understand what is being insured and whether you should supplement. Because there are a lot of things that come up, and it's not just about whether, what the standard of disability is. For example, in the surgeon example that I mentioned earlier, one of the issues that we came across as I was consulting with him before he filed a claim was that there was a definition of basic monthly earnings that made no sense for him and his practice. And I don't know how this happened, but for years they were paying for an insurance product that defined the earnings. So basically, the earnings from which the benefit would be calculated. So 60% of whatever that basic monthly earnings was, in a way that didn't line up with actually how the physicians were being paid. So it was
Yeah.
really unclear, like, well, how would they determine what your benefit is? Because this doesn't match the reality of your practice. And so we had to work with, the broker to figure out, there needs to be a plan amendment because right now there's a plan term that doesn't even apply. And so,
Hmm.
fortunately we were able to work that out and we caught it prior to him filing a claim, but that could have been really challenging if he filed a claim and then we had to go back and negotiate an amendment. So that is where also the physician was a part owner. A lot of times professionals are not owners of the company necessarily and don't have that negotiating ability with the
Yeah.
insurance carrier.
So what happens? So people come to you typically, I'm guessing, after they've been denied. So kind of walk me through the process. They file a claim, they get denied, they come to you. What does that process look like? How long does it usually take?
Yep.
And when does the judge or how does when does it get finalized?
Yes. So when a claim is denied, the ERISA regulations require that they have 180 days to appeal. And it
Okay.
sounds like 6 months is a long time, but in reality, it kind of it isn't. And so
So from the
we
date of denial, you
data
have to
denial.
file. Okay.
Yes. So the day that they receive the written decision denying their claim, they have 180 days to appeal.
Okay.
So in an ideal world, we would be getting that phone call as soon as they get the written denial letter. Sometimes we get it the day before the appeal is due,
Of
and
course. So
that's not
yes.
that's not ideal. So you do get 180 days to appeal. So let's say, you file for disability, you get the written decision you were not expecting, which is our doctors don't believe that you're too disabled to work, and so we're not going
Yeah.
to pay you. You get 180 days. In that time period, that's where you really, I mean, that is really where your case is made. It's on this, what we call an administrative record. And I know there are a lot of people who really hate that term because we're not talking about an administrative agency, right? There's no private body that is deciding this. When you get a denied claim, let's say, for example, you have an insurance claim with MetLife. MetLife denies your claim. You have to appeal to MetLife, and they call that exhausting
You
your
appeal to
administrative
MetLife,
remedies.
not to a court. That's
Exactly.
what you're saying.
Yeah.
Okay.
You've got to appeal.
And
And
so they
often
have
if
their own department that runs all of this?
exactly, they typically have an appeals department because they
Mhm.
want a decision maker who is not the same person, same, department that decided the claim. Otherwise, they're kind of just rubber stamping themselves, right? Like how
Yes.
many of us like
Yeah.
to admit that
Yeah.
we're wrong? So it's somebody else that evaluates the claim and typically a new medical professional. So, we would, work to get the appeal going and what gets submitted in that appeal is obviously going to be very case specific, what their disability is, what's the symptom that's causing impairments, and how do you really translate someone's medical condition, their symptoms, into functional impairment in the workplace. So what we experience, a lot of our clients, like we have clients with conditions all over. I mean, we've worked with every single kind of condition. Lately,
Mhm.
I've been seeing a lot of like long COVID disability claims. We see a lot of what we call like individual, I mean, sorry,
I just had a long
yeah.
COVID claim from a client in the Bay Area just yesterday.
Oh,
An
okay.
existing client of mine. Yeah, it's
Yeah.
it's real. Yeah.
It's real, and for many people who experience it, it is incredibly debilitating. I mean, you have people
Mhm.
who were super sharp, like at the top of their game, at the top of their field, at the top of their careers. All of a sudden, they get hit with this, you know, basically new, relatively new type of condition that not like the doctors still don't really fully understand. It's multidisciplinary.
Mm-hmm.
And of course, it's easy for the insurance companies to say, it's subjective. Oh, there's no proof you're really that tired. It's no proof you really have this brain fog. And so it can be really challenging and expensive to prove these
And they don't have
disabilities.
the energy to fight it.
Exactly, exactly. And so, there are a lot of ways that you can shore up that evidence, but it does take time. You have to find the right providers, you got to get the right testing. And by the time, you go through all these steps and you compile, basically the appeals record, you're already at day, 180 in a lot of situations. And
What
so,
happens if you go past day 180? They come to you with, 2 weeks to go and you say, you need to go see this doctor. We need to do this. And
yes. Oh,
what
we
happens when the deadline passes?
you don't want the deadline to pass, not even by one day.
It's just the door closes and that's
The
it.
door, the door can close. And by when I say can close, the ERISA regulations require that the insurance company or the claims administrator gives a claimant at least 180 days.
Yeah.
The way that the plans have interpreted this, and sometimes really the courts as well, is that if you are one day late, if you're given 180 days and you submit the appeal on 181st day, that they can refuse it. They can refuse to consider it for being late. So that's really it's a big problem. There are some very special circumstances where you might be able to get that deadline told, but unless a carrier is going to agree to review the appeal and not just deny it for being late, it's a tough case to take. And I've had to turn down many cases where they just for some one,
For having
they
a
were too
deadline.
sick to deal with it. They didn't realize they wouldn't be able to appeal again after 180 days. And I just like my hands are tied. Like on the you have a good case, but on the merits, but procedurally, the
It's
insurance
just,
company's
yeah,
probably going to win on this.
So let's say they do get it in on time within that 180-day window. Then from that day forward, how long does the process usually take?
Yeah. So the plan administrator or the claims administrator has 45 days to decide the
From their
appeal
receipt to
from
get
their
it.
receipt.
Okay.
But, there's always a but. They can extend that time by an extra 45 days if there are special circumstances. So we get into arguments a lot with carriers about what does special circumstances really mean? So you not being able to get a review on time or you just needing more time is not special circumstances. And this is important because it goes to the issue of exhaustion and whether you can file a lawsuit. So let's say you submit your appeal. The insurance company not only has to decide the appeal within 45 days, if they're going to deny your appeal, they've got to give you the new evidence that they came up with to rely on to deny your appeal before the end of the 45 days in enough time for you to review it and respond. So ideally, you're looking at, somewhere between day 25 and day 30, they send you a medical review. It says, we don't think your evidence supports disability. You've got 10 days to respond or something like that, and then we'll decide. Well, often that's not the case. Often the insurance companies might come to you at day 44 and say, here's a medical review. And you obviously want the time to respond to that because you want to set the record. Because once they issue a final decision, that is it. The record is created, and only in very kind of limited circumstances will a court open the record and consider new evidence.
So if
So
it's final, it's final. It's you can't
yeah,
even appeal it.
it's
Wow.
final. So if the plan has more than one level of appeal, you can certainly exercise that right and appeal again. Many just offer one. And so once they deny your appeal, they'll say, you can go ahead and sue us. And so then when you file a complaint, usually in federal district court, because the rest is a federal law, that record, that what we call the administrative record, again, not developed by an administrative body, but just it's called the administrative record, will be everything that was submitted at the time of the claim up through the final denial. So how that record is developed is extremely important. Unfortunately, what I'm seeing now, there's a lot of benefits to AI, and I know this is not an AI podcast, but we are seeing a lot of claims who are trying to go at it on their own because they're like, oh, well, AI is telling me all I have to do is this.
Of
And
course,
there's
and AI
a
knows better. Yeah.
yes, AI knows better.
Yeah.
Well, I say that sarcastically, but
So am I, exactly, because
yeah,
they may not. I mean, you
right,
can't really replace your expertise with a
right,
chatbot per se.
right.
But the problem is AI might be telling them what they want to hear. Oh, yeah, you've got a great case, and maybe they
Hmm.
don't.
Yeah, or
So,
just say this, make this argument. Oh, the insurance company, they screwed up in this way. And, and I hate to say it, and it's unfortunate. So in California where I practice, we have a state ban on discretionary authority, which basically means insurance companies can't cover California residents with policies that reserve discretion to themselves, like so that when they're in court, the court is reviewing it for abuse of discretion. It's harder for claimants to win ordinarily under the abuse of
really?
discretion standard. So
Hmm.
that's great for California. And so for a long time, we were saying a lot of the cases that we would have to litigate would be under de novo review. So the judge is just deciding, did the claimant establish disability, with the preponderance of the evidence? So that's more than 50%. Well, now we're kind of seeing this wave of carriers trying to get around that by putting like choice of law provisions into these policies that say, okay, yeah, we're covering a California insured, but we're going to say that this policy is governed by the laws of, I'm just throw it out, Colorado or something, a state that doesn't have a ban. And so, unfortunately, courts are getting around or allowing insurance companies to get around the California ban on discretion by enforcing these choice of law provisions and saying, well, we're going to apply the law of this other state, and that state doesn't have a ban. So now we're kind of seeing an uptick on cases being now decided under abuse of discretion review rather than de
Wow.
novo. And so that's important. It's important because if an insurance company has deference or is given deference, it means that their decision will be upheld as long as it's supported with like a reasonable basis. And it's not a rubber stamp, and there are definitely cases where the insurance company's conflict of interest has influenced the court's, review of the claim because they're not, you're supposed to look at the decision with some skepticism if an insurance company is conflicted, right? It's the same company that is paying the benefits, it's the one deciding the claim. But the standard review is something that I'm seeing is just coming back to surface as more of an issue, particularly for states like mine where we enjoyed the ban on discretion for a period of time.
So are you able to help people outside of Colorado, or I mean outside of California, or are you just California specific because the laws vary?
So because it's a federal law, we can represent, anyone anywhere in the country. We focus primarily in California because frankly, California
You have
cases
enough
just keep us
claims. Yeah.
busy.
Yes,
Yeah.
exactly.
But so you do have to have, if you're going to handle a claim for somebody who lives in another state, it's obviously good to know if there's like a ban on discretion or any
Yeah.
non-preempted insurance law that's going to bear on the decision. But because it's a federal law, you have to be aware of some kind of jurisdictional differences, but you can really handle cases anywhere.
So of the people that come to you and you file, so they come to you and you help file the appeal, what percentage of those appeals do they honor the policy and actually pay the claimant? And what percentage do they just deny?
Yeah. So in our experience, like and we do track this internally, we get about 70% of the appeals overturned or the denials overturned. So that means
In the client's favor. Yeah.
in the client's favor.
Yeah.
So, most of our
That's solid.
cases are
That's really
not
good.
seeing.
Yeah.
Yeah, it's good. It's good, and I think for a lot of clients, they prefer to be on claim, but there are some advantages and disadvantages of that. When you're on claim, if you win an appeal, it doesn't mean the insurance company's always going to pay you. Like
Really?
there is always work that we are doing on claims that are in pay status. We
Well,
have.
how does that work? If you win
Mhm.
the appeal, you say, no, this person is disabled. You win
Yeah.
the appeal. How do they not pay the benefit?
Well, they might pay a benefit for a period of time.
Oh, so they're just saying, but then we want to, you to go back to the doctor and prove that you're still disabled. Is that how it is?
Absolutely. And this is why
Gotcha.
I always tell clients sometimes a win is not always a win in the way that you think that it is. Like we can prove your disability now, but it's actually the claimant's burden under the policy to demonstrate ongoing disability. And the insurance company always
Oh,
has a right to periodically perform medical reviews or have them examined in person, potentially surveilled sub rosa,
yes.
even
Yeah.
if they win. And so I've had cases, I would say for any particular client, probably the most appeals I've done for one client was three in a
Wow.
short period of time. And then it eventually went to court and
Yeah.
it's settled. But it's not a one and done. We have clients who
Wow.
have been my clients for
Unless it's
years.
something just totally permanent, they're paralyzed. But in that case, they probably would have been paid anyway, right? Those cut and dry
Um,
ones.
Yeah, I mean, you'd be surprised. We have clients that have long-term permanent disabilities, but you see these cases all the time. Like there was just one published decision I blogged about where somebody had MS for 20 years. You'd think that they'd recognize this was permanent,
And that doesn't get better.
and it
Yeah.
and it doesn't get better, and yet
No.
they terminated her claim and
Oh
forced her
my
to like
God.
litigate this. And so we see this a lot. I have seen way too many claims, unfortunately, where somebody has been paid for so many years. They're not getting better. And this is the problem. It's that you do under these policies, there's a requirement typically for regular care and treatment. So they really want you to be getting appropriate care and treatment so that you can get back to work. And that's the idea behind this, like that you are actively trying to pursue recovery. And there's always fights about, well, what does that really mean? Does somebody have to get a really invasive surgery or not? But when you have long-term disabilities, often the way that it looks is that you have somebody who, in the beginning of their claim, might be undergoing a lot of treatment, a lot of different diagnostic workups, a lot of different PT. And then it gets to a point where it's like they've tried everything and all they can do is maintain it. Right. So
Hmm.
they're not going to the doctor as much because there's not much more that they can do. And so then
They
you
just
have
learn to
these,
deal with the pain,
you learn to deal with the pain, you learn to limit your activity, right? So you're not doing as much because I've got these energy buckets and this is all I can do for, this day. And
And
then
you
you
may have
fast,
lost some of your
yeah.
skills to go back to work too, right?
There's that as well, and
Yeah.
particularly with how fast, like, technology is changing. I mean, I have clients who've
Yeah.
been out for a few years and they're like, I'm afraid,
How do they go
what am I going
back?
to be able to get when I go back?
Yeah.
Like I've been behind this AI game, like there's a lot of those vocational considerations as well.
Yeah.
But, you have these situations where the care goes down because they're in maintenance mode. And then let's say you get a new claims rep. And this is somebody who doesn't have the historical experience, and they're just looking at, okay, let's get your last 6 months of medical records. Oh, you were only at the doctor like once, and oh, it says that you were doing well. Oh, well, that must mean you're able to work. Benefits cut off.
But doing well, what does that mean? It means
Exactly.
you're functioning well considering, you're in a
Right.
wheelchair or whatever. Yeah.
Exactly. But Jamie, I can't tell you how many times I've seen this where in a peer review or an insurance company review, they'll say, in this doctor's visit, the claimant said they were doing well. So I tell
Well,
my
I mean,
clients,
whenever you ask, how are you doing? Fine. Oh, so they must be fine.
exactly.
Everybody just says fine, even if they're not. And you
Yes.
can't take that you have to take that at face value.
Yes, I understand, and yet we still counsel our clients to just be careful
Say
about
I'm
the
not
small
fine.
talk.
Yeah, yeah.
Yeah.
So you've seen a lot of claims, over the last couple decades. What are the hardest types of claims or conditions that you see that are more likely to get denied?
So, like I said, we're dealing a lot with right now long COVID claims. A lot of these invisible disability type claims where what causes the disability is a lot of variability in function. And what do I mean by that? Good days and bad days, right? So somebody might, their job might require like a high level of cognitive functioning, but they're not bedbound, right? And so
Mhm.
like you might catch them if you're surveilling them, as sometimes the insurance companies do, running a couple of errands, right? And they go, "Oh yeah, this disabled attorney was able to pick up her kids from school and
Oh,
drove 10 minutes and then went to the bank and then went home and gosh,
and that
she's
was
so
the only day
active."
a week that they were even out. Yeah. Then they went home and napped
Yes.
for 16 hours. Yeah.
Exactly. And because surveillance, they're not allowed to follow you in your home, thank goodness. They don't see that. They don't see that like recovery period, and they don't see what it takes to do the very little that they do to maintain their lives. And these
Yeah.
policies weren't designed, like I said, to ensure people from, only if you're housebound. They're designed to ensure you from being able to work full time and consistently. And
Yeah.
so I do see a lot where the symptoms are often hard to quantify, where you do need, I mean, like cognitive impairment, for example,
Yes.
neuropsychological testing will often measure that, but it's often expensive and it's often not done as part of ordinary care and treatment. So a lot of times insurance won't cover it. And so when you're experiencing this brain fog and you're like, here are all these examples of how I was very high functioning and now I'm experiencing this brain fog. And they're like, oh, well, we don't see proof of it. Right. And then you have to
How do
like,
you prove that? Because it's very,
yeah,
yeah, it's subjective. So that can
yes,
be really tough. And have you also seen changes with more people working from home? And yeah, I mean, things have changed since COVID. How
yeah.
has that impacted from your vantage point in terms of claims being paid? Maybe because people are working from home, but they may not be able to work as much. How have you seen things changed?
Yeah. So it's a really interesting phenomenon actually in the last 5 years because now you see remote work becoming more common,
Mm-hmm.
right? And there's some good and there's some bad with that. The good is that a lot of people with disabilities can be accommodated because they can work from home.
Mm-hmm.
And then what happens when an employer starts saying, no, you've got to start showing up to the office, right? Or there's a layoff and they've been enjoying like a highly accommodated position. And that's the only way they've been able to work, but they would otherwise be disabled, right? And so then they get laid off and they're like, well, they file for disability because they're like, I can't actually get a job at another employer because I was only able to work this limited period at home, right?
Yeah.
And so that kind of that creates sort of like vocational issues and questions as to what is one's own occupation and how much you can really say like, oh, well, you could just work from home, and is that like a fair type of accommodation, depending on the employer. So that's been a really interesting thing to see play out because now, more and more people are working from home and they're actually able to work full time only because they have that accommodation.
Yeah. So it might make for more gray area too when it comes to paying
Hmm.
claims, for sure. So now
Exactly.
we work with people, and again, in the beginning part when they're getting their policy, and by the time they come to you, have you ever seen circumstances where maybe people just bought the cheapest policy or they had it stripped down to try to save money and things that they didn't consider, and then it hits them later at the time of claim?
Yes. So in the ERISA context, so often, like you work for an employer and you sign up for their benefit package, but sometimes there's different levels, right? And so employers say, well, we'll give you this basic 50% up to a cap of a certain amount of protection, but you can buy up and you can pay for the difference and you can get higher coverage, a higher benefit amount. We definitely have had situations where, maybe someone's like, I'm not going to get disabled. I don't really need this. I don't want to pay for the premiums. And then they don't elect that coverage. And then
Mhm.
down the line, let's say they do try to add it, but then they become disabled within the first year of increasing that coverage. Well, you're going to run into problems like pre-existing condition, or they're not going to, honor that buy up because your disability occurred within 12 months of you doing that.
And is
I've
that how
seen,
most group policies are? There's a 12-month sort of waiting period before a pre-existing would be covered. Is that
yes.
typical?
So pre-existing conditions, it's really important to understand how they work because in most cases, I've seen a few exceptions, but I'm going to say in general, in most cases, when you start working for an employer and you become covered under their group policy, there's going to be about a 12-month pre-existing condition exclusion.
Okay.
So if you become disabled within the first 12 months of coverage, they are going to look back to see what kind of care and treatment were you getting in either the
All right.
3 month or the 6 month period right before you started working. Because they don't want people who know that they're sick or they're going to go on disability, get a job that has insurance and then go right out. But if you're able to work the 12 months, they can't hold pre-existing condition against you forever. And so that's the point of that. And so, sometimes I'll be talking to people who are in this, maybe they're working with an accommodation or they have a disability and they're like, I'm going to switch employers. And I'm like, get that new employer's policy, understand what this means, because if you cannot work, for at least 12 months, your claim is likely going to be denied. And
Mhm.
so if right now you have a disability and you might be able to get covered under your current employer's policy, you really have to weigh, what you would potentially be giving up if you leave that employer and you go to another employer. So
Yeah.
that's really important because these pre-existing condition exclusions, they're broad in most cases. They're really unforgiving.
Yeah.
They'll find any basis to deny a claim on pre-existing.
What about people, you're coming out of law school and maybe you're diabetic or you already have some kind of condition and you go work at a law firm? Does that mean when you sign up for coverage, those types of conditions wouldn't be covered for the first year?
Um, in general, yes. So if the disability is caused by that. So let's say you are a law student and you have a disability and your employer you're working full time with it because you have an accommodation. But let's say something happens where your condition gets worse, but you were treated for that condition within the 3 or 6 month period before you started work. If you become disabled within the first year of coverage, yes, I mean that's a real concern. There's likely going to be a denial, and
And
it
what
may be
about like,
enforceable.
yeah, I mean, like I'm just thinking we're seeing a lot of younger people, a lot of younger
Mhm.
attorneys or people coming out of medical residency or just their first jobs. A lot of them have depression, anxiety.
Yes.
How does all of that translate into a group policy when they sign up for their first job?
So, regardless of what the condition is, if it caused or contributed to the disability within the first year, it's likely going to be excluded.
Okay.
There are some, we see some interesting cases where, let's say somebody has depression, like diagnosed depression,
Hmm.
and then in the first 12 months of work, they go out with anxiety. A lot of times the insurance companies will say,
Adjacent to the
yeah,
depression. Yes.
it's caused or contributed to by, and so there's some kind of definitely interesting cases that come up when you're talking about really what is pre-existing, really what is the disability? Was it something that was diagnosed or not? And so those are some challenges. But I would say for the first year, somebody who has a pre-existing condition that could potentially get worse or is already on the route of being like really progressive, like you got to hold on to 12 months. I mean,
Yes.
because if you work 12 months in one day, just one day past that, then you're in the clear.
And then
But
it's 100% covered. They
Mhm.
can't deny that.
Exactly,
Okay. Yeah,
exactly.
that's good to know. Because I also get a lot of calls. Oh, we're doing family planning and we want to get pregnant. And, so it's like you do kind of have to plan those things ahead of time,
Yeah,
I would assume. And again, that could be a limited type of claim, but still, it's a claim nonetheless.
right.
So, um, so of the things that you look at on a policy, which of these are you think are the most important? Do you think it's the definition of disability, the monthly benefit, the elimination period, or the benefit period? Like, which of those things do you think have the most impact?
It's hard to rank them because I think that they're all important, and those are like all the top things that we are looking at. So if I'm evaluating a policy, I am going to the first couple pages where it's saying, well, how long does this pay? Right? Because I've seen policies that pay only 5 years.
Hmm.
And, that's a huge difference, particularly for somebody who's 40 years old,
Yeah.
to have a policy that pays 5 years. You need to know that. Does it pay to 65 or does it pay to Social Security retirement age? With
Hmm.
the latest of which is now 67. That
Hmm.
2 years of extra benefits makes a difference.
Yeah.
How long do you have to wait? Most LTD policies or long-term disability policies will have like a 90-day or 180-day elimination period, but I've
Yeah.
seen them be as long as 1 year, right? Because
Wow.
they'll start after um, if the employer has a short-term disability plan, or if you're in California and you're in one of 5 or 6 states now that I think offers a substantial public short-term disability benefit, that's going to pay for the first 52 weeks, and that's going to be an offset. So I always
Yeah.
look at offsets as well. What is the value of this benefit to you? And, in California, because we do have such a generous state disability program, the first year of disability, depending on your earnings, depending on the private policy's max benefit amount, could be pretty low. Like if somebody, is earning $100,000 a year and they've got a 60% benefit, so it's paying 5,000 a month. But then they get, 7,000 a month from state. They're probably going to get nothing or like a very small minimum benefit for the first year of disability.
Hmm.
And so, unfortunately, what I also have seen happen is, because this happens, people don't pursue the appeal because they're like, oh, well, I'm not getting any money from it anyway. I'm getting this offset and I'm going to go back to work anyway. So I don't
Hmm.
need to worry about this. They let their appeal lapse and then they get to the year mark and they're not better.
Yeah.
And now they really need that private policy to kick in
Yeah.
and they may have blown their appeal deadline.
Yeah. So, what do you think is the one decision at the time of purchase that most often decides whether or not a claim is going to actually be paid? Maybe you're leaving your employer and you're going
Mhm.
to go out on your own. You're a solo practitioner and you're going to like, okay, I'm going to get my own policy. What is the one decision that really decides whether or not they're going to get a claim paid years later? Is it, meaning when they're setting up the policy? What do you think is going to be the most important part of that?
Yeah, I think what I would be looking at is the carrier itself. Is this a carrier who um, is generally going to, pay the claim or someone that gets litigated against a lot? So
Yes.
people will always come to me and they go, who do you sue the least? And I can tell them like, well, this carrier you're probably going to have. So that part is important. But I
Yes.
also think it's important to a lot of times when you're applying, particularly for individual insurance, you have to, you know, fill out these questionnaires and, you have to make sure you're answering them honestly, because if you incur a disability within a certain time frame and
Usually,
they go,
yeah,
oh, well, you
2 years.
didn't,
Yeah.
yeah, the 2 years that you didn't disclose it, that could be a problem. But you want to make sure that the own occupation, that you have an own occupation policy. I think that is really key because you want it to be insuring you for what you do.
Hmm.
And that is key because like I said, I've represented a lot of professionals, lawyers, doctors, dentists, and they have a condition that just it really impacts their ability to do their specialty, but not necessarily their ability to work. So if they didn't have the right policy, it's going to, not be as beneficial for them because the insurance company can say, well, you can't do this, but you can do that.
Hmm.
I do also think it's really valuable to have policies with partial disability benefits, right? Because a lot of times people can do some other work, whether in a different occupation or their own occupation part-time. And a lot of these partial disability benefits permit somebody to earn, let's say
Or
80%,
still work in
60%.
their occupation,
Yeah,
just on a limited. What
exactly.
percentage of group policies do you think have a partial disability rider or component of the policy?
I would say most do. Most that I've seen will
Okay.
have some kind of partial disability benefit.
Yeah.
I've seen some, particularly self-funded plans, like these big companies, a lot of times pharmaceutical companies, they self-fund. They don't have that. They might have some real rehabilitative employment provision that says, okay, we'll let you work part-time, but it's got to be something we approve. But
Hmm.
there's no like partial disability. Well, if you can make X dollars, we'll allow you to work, but we're going to offset this amount of that. So I
Yeah.
would say most do, and so that's important. That's good to have because you don't want to be in a situation where you're sort of like disincentivized to even trying.
Yeah.
But you also have to be careful too about how close you get to that partial disability limit, right? So
Yeah.
if I can't tell you how many frustrating conversations I've had with opposing counsel about, well, if the client can work 60%, why can't they work 100%?
Oh gosh.
And I say, well, if you don't believe in partial disability, if you don't believe that somebody can only work 60% and not 100%, why do you have a partial disability policy? Just make it a total
Make it
disability
all or nothing.
policy.
Yeah, exactly.
Yeah, and then we don't have to have this conversation. So the closer you get to that cap, like let's say they'll allow you to work 80% and you're writing that line,
Yeah.
the more they're probably going to be looking at your claim pretty closely
Yeah.
and trying to see, like, well, we think you could actually work more. And then that's what the fight becomes. The fight becomes proving you are working at your absolute max capacity. And unfortunately, I've seen many really motivated professionals work to their detriment. They
Hmm.
push, they push, they push, and they to the,
It
detriment
doesn't
of
make
their,
for a great case if they're
yeah.
working, even if their doctor's telling them not to.
Right. Or, like, yeah, pushing, beyond the bounds because they don't want to lose their job, but they're not spending any time with their families. They have to work on the weekends because they've got to rest during the week, and their whole lives become nothing but trying to just work, and keep, their policy in place. And it's a lot. I understand, there are a lot of fears around losing your job because even if you have this employer provided policy, it doesn't require the employer to keep you employed.
Yeah.
And so if you lose your job, guess what else you're probably losing? Your health care.
So walk me through what happens with that too, because we've had clients that, like, I'm just thinking off the top of my head, we had somebody, he was on Wall Street and he had a brain tumor. And that
Hmm.
first year, and so they paid. He had a group, he had individual, and they paid, but they kept him on the payroll that first year just because they wanted him to come back, but he wasn't able to. So at the end of 1 year, he was no longer considered employed. And so that was a big shift. Like you said, lost his health insurance, and it really became, a lot of people don't think about that. Now you've lost your job. How
Right.
often do you see that happen?
A lot. A lot.
So kind of walk me through what
Yeah,
happens to somebody when they have, pretty significant disability and they're totally out.
yeah.
What does
So
that look like?
I'll give the caveat that I'm not an employment attorney, but I know enough about the
Yeah.
leave issues
Well, yeah,
because
I'm just talking
yeah.
from the disability claim perspective, like what happens to that person?
Right. So they somebody goes out on leave, right? And they might have job protected benefits for a period of time, right? And then at some point the employer is going to say we can't accommodate you anymore, and so we're going to have to let you go unless you can return to work. And so it's usually at that point, if it hasn't happened before, that they get COBRA notice because their employment is terminated. So that means their group medical coverage is terminated, and
Hmm.
any other benefits are terminated. And then that
And they
COBRA
lose their life
coverage,
insurance benefits too, and they're typically uninsurable now. Yeah.
yes, but sometimes, and we always ask our clients because they don't know this, and they'll come to us say, my LTD claim was denied, and say, well, do you have life insurance? And I go, I don't know. Well, let's go ask your employer, because a lot of these life insurance policies have what we call LWOP claims or life waiver of premium claims. So if
Hmm.
you're disabled and you lose your life insurance coverage, you can continue it at no cost to you.
Mm.
Typically, if you are under the age of 60 at the time of disability,
Yep.
and if you can't perform your job or any job, you can continue to get that coverage without paying for it. And so that is a huge benefit, particularly for people who have families or maybe they have a disability based on a condition that's terminal. Yeah, they're not insurable. So continuing
Yeah.
that coverage, for
Yeah.
free is really important.
Knowing that there's a chance that they're going to have a claim coming up. So, yeah, so cool.
Exactly. So it's important to know that before you're terminated because a lot of times, they still employees still former employees have a right to the plan documents that covered them at the time of employment the time employment ends, but it's good to get those policies prior to termination of employment just so you understand, is there a life insurance waiver of premium claim? Who administers it? Is it the same company that provides the long-term disability insurance? Is it a different company? What's the definition of disability? Like we have cases where a long-term disability policy will have a own occupation definition, but the life insurance for purposes of the disability waiver will be in any occupation.
Hmm. Yeah, you have to
Um,
be total. Typically on those policies, yeah, you have to be totally disabled.
yeah, they tend to be more strict. So
Yeah.
sometimes we have clients who are just like, you know what, it's just too hard to keep fighting to keep this coverage, that they either decide, you know what, I'm going to pay for the premiums and convert it to an individual policy, or just drop it.
Yeah.
Um, so it
So
really
you work in like Silicon Valley area, and we get a lot of clients that come to us too. And a lot of them are working at a lot of these, big software or developer
Mhm.
or tech companies. What advice do you have for people? Because we get a lot of this. They are thinking about going and, going into the startup community, starting their own company. What kind of advice from your vantage point would you have for these people that are high income professionals, but they want to go out on their own?
They should 100% have individual coverage. They really should because in my experience a lot of the startup companies is they don't even offer group policies.
Mm-hmm.
Um, and and if they do, it tends to not insure them for their actual earnings. So they
Mm-hmm.
tend to be underinsured.
Mm-hmm.
So I would say, have a policy that follows you.
And a lot of them too. So like we get a lot of them, they're at a company where they're making really good money and they're going to go out on their own and they may not have an income for a few years because they're just reinvesting all their own money into their new business. So if you
Right.
wait to go out there and you can't prove income, you might have to wait a few years and then you're sort of flying without a net, without having that. So
Yeah.
yeah, that's really tough. So so of maybe now I'm just going to ask just a couple of just brief questions. So give me a number. So of the denied disability claims that come to your office, what share of those people had only group coverage and no individual coverage?
I would say 75%.
Wow.
But I advertise myself as an ERISA attorney, so it could be a
Yeah.
self-selection. But
But do you think that's
yeah.
pretty typical? Because you're working, with
Mhm.
primarily high income professionals. Do you think, maybe only 25% of them even carry their own individual policies?
Yeah, I would say that that's my experience, just because individual policies they're expensive. Like group policies are cheap,
Yeah.
relative, right?
Yeah.
Because they can get away with murder essentially. If
Yeah.
they don't pay a claim, and someone goes bankrupt, there's no consequential punitive damages. So the
Yes.
group policies are, they're provided by the employer, they're facilitated, usually through premium deductions from paychecks, or the employer pays for it, so it's easier to get. And because employers want to be competitive, a lot of them in certain sectors will offer long-term disability. Whereas
Yeah.
individual coverage, particularly a young professional might be going, well, this is going to be a few $1,000s a year, and I have all these other, big expenses living in the Bay
Expenses.
Area in
Yep.
particular. They're probably not going to view it as a necessity, particularly when you're young and you're healthy and you're just, you feel like completely unstoppable. It's not a priority. And I think
Yeah.
that it's definitely something that as a young professional, or even if you're, not a young professional, but you're still relatively healthy, now's the time to get that insurance, because
Yeah.
I've seen way too many problems with the group policies, and problems that I don't think would exist if someone had an individual policy.
Yeah. So I know you have a really interesting story watching your father, who was a
Mhm.
disabled Navy veteran, who
Mhm.
struggled to work and support his family. So what do you notice in your clients' cases now that maybe other attorneys might miss, just based on your own personal experience?
Yeah, I think, when I started practicing in this space, I went to law school because I wanted to help people, and particularly employees. And then I discovered the world of employee benefits, and particularly, with the disability insurance. And I really just, felt like, okay, I found my calling. Like I was able to, relate to my client's situation in a way that, I can't speak for other attorneys, but at least for me, like just really having that understanding of like what the family's experiencing,
Yeah.
and really, a lot of times, most of my clients, I say all my clients don't want to be on disability,
Yeah.
and it's really, it can be frustrating sometimes because, when we're dealing with opposing counsel, they're like, oh, well, we think, they can work, and then they're just not. And it's like, gee, this is not fun for them. They're getting
Nobody
this,
wanted, I know. I have
nobody
clients
wants
that call me and
this.
they
Yeah,
apologize. Oh, I'm so sorry. I'm like, this is why you have it. Don't be sorry. You should be
right.
grateful that you have it. But it sounds like your own personal experience gives you another level just of compassion to, because you know what people are going through, because sometimes they're ashamed, sometimes it's
Yeah,
painful emotionally or
yeah,
physically. So it's
yeah.
real, they're coming to you at probably the worst time in their life.
Yes, no, absolutely. And sometimes I have clients who are just they're so proud, and those times like a little too proud for their own good, where they're not talking about their experience, and they might be underreporting their pain to their
Or
doctors or
they're
their friends
telling
or
their
their
doctor
family
they're
members.
fine. Yeah.
Yeah, exactly. And they're not. And they kind of honestly need that permission to say like, this is, the truth of my experience. But sometimes like that's the case where I've had these like, sometimes I say I'm a part-time therapist because I have these like conversations where I'm like,
Absolutely.
just you can't go back. And that was a conversation I had with my dad, finally. I think I was a young lawyer and he had been in and out of work. And I was like, Dad, you have to stop. Like, you
Mhm.
got to go out. Like, this is just, it's not sustainable.
Yeah.
Unfortunately, he was in the VA system and they had good benefits and Social Security and all
Yeah.
that. But it took a long time. And I think people try, as much as they can for as long as they can. And they have to, these policies are there to protect them when they cannot continue.
Yeah. So what's the one case that you've had through all your years that really sticks with you? Somebody that you were able to help? Because I mean, I've got a bunch of different ones and they're kind of for different reasons.
Yes.
There's,
Yeah.
like I have like my very first one, like, I sold him a policy and then a year later he had cancer and he'd been in my office. I had another one. It was his first day on the job as an orthopedic surgeon and he got to a terrible car crash, burned half his body. Oh God, it was just awful. Like there's always these cases that stick with you, but I'm just curious from your experience, what's a case that's really kind of stayed with you?
Yeah, that's a good question. And it's hard to pick one because I feel like I've had so many where, yeah, they stick with me for different reasons. Well, I'll tell a little bit of let's say it's a fun or more heart-lifting one, but I had a case that went to judgment. So a lot of these cases will resolve before we even file a lawsuit, or once we're in litigation, that they'll settle because it's consistent with civil litigation. Sometimes you get those cases that just they don't settle. And I had a client who was just she was so sick, and I had gone to her home. I had videotaped her like a statement from her bed where she pretty much
Oh
spent most of her
God.
days. And really just, spent so much time getting to know her and her family and her story. And so, the case didn't settle. And she just, was like, I am going to, like at this point, I want the judge to decide. Like I want justice.
Hmm.
And we went to court, and the reason this kind of sticks out sometimes because it's a little bit it's not funny, but the peer reviewer who evaluated my client in person did such a sloppy job.
Hmm.
And my client is a woman. And in this peer review report or this independent medical evaluation report, he makes a comment about her testicles. And it wasn't that kind of an exam. And so this is like sort of like the ridiculousness too of
Somebody was reading the wrong report.
well, or copying and pasting or something. And like, why would you even put this in an IME? Like, this is just weird. So we
And
point this
even if it
out.
was a guy, why would that be relevant unless it
Exactly,
was, yeah.
exactly. It wasn't, and it wasn't that kind of condition, it was like a back condition. And so, um, we point this out to the insurance company. We're like quoting it. Look how sloppy this is. He's talking about testicles, and my client's a woman, and then they don't fix it. Like they don't go back to the peer review. They don't get an addendum, nothing. So, we argued the case in court. The judge did see it our way and did make a note of this in the decision about, the sloppiness of the report and the
With a
testimony. Anyway,
straight
so
face. Yeah.
yeah, so it was, at the end, like we got a favorable decision. My client is still being paid to this day. And this was years ago. And, we continue to represent her, still have to run interference because sometimes, they do these reviews and they act like they want to terminate her. I'm like, she's permanently disabled. So it sticks with me because it's just, from start to finish, I'd worked so closely with her family and she's still my client. And it's just, you
What
know,
was her
we,
condition?
a lot of bad car accident, so really bad degenerative like spinal
Oh God,
issues
that's
and just
terrible.
severe limitations on sitting, significant pain. You just basically you have to just do what you can do to get through the day.
Mhm.
Um, And yeah, so I really felt like it was one of those cases where I felt like, okay, this is justice. Like she's not taking a compromise, not taking, a buyout. Like she's going to get her full benefits and we were going to stay with her through the long haul.
And she's suffering. That's
Yeah.
terrible. I'm sorry. So, well, in closing, that's Michelle Roberts of Roberts Disability Law, an ERISA benefits lawyer who has represented claimants and only claimants since 2005. So, what stays with me is that most of a denied claim was settled long before the denial arrived, in coverage decisions made back when nobody was worried yet. So, Michelle, thank you so much for being here today, for sharing your experience, sharing your stories, and you're really a wealth of knowledge. So I really, really appreciate all you do, and your clients are very fortunate to have you on their side when they really need it.
Yeah.
So well, thank
Thank you,
you.
Jamie. And thank you for everything that you're doing and getting the word out and educating people about these policies. It's important. So
Yeah.
thank you.
Well, thank you.